Hello and welcome to Crypto Weeklies. In this video, we analyze Ethereum, identifying macro bottoms. None of the content is financial advice. Let's get started. Ethereum on its USD pair and on its Bitcoin pair is right now, per my analysis, in an accumulation phase. You can see that the major trend line that ETH USD held since about 2022 June has been broken. Now ETH USD is right now less than 0.23 Fib level. Price is at around 1763 cents. Sorry, $1,763 and some change. We have seen three distinct tops for ETH. Again, this is on its on a line chart, but if you look at the bar chart, so the candle chart, you can see the three distinct tops occurred close to that 0.786 Fib level at around 4,000 level. If the price were to go back to that 4,000 level, that would represent about a 120% gain, or 2.2x from the current price of about $1,700. And if there is a new all-time high in store for ETH, like it had it back in from when it was launched in 2015, it had a new all-time high in the 2017 rally or the bull run of the post-halving year, and in 2021, if it has a new all-time high in store, the conservative estimate for ETH's new all-time high is at around 1.61 at around $7,000 per the Fibonacci level, and that would represent about a 300% gain, roughly speaking, from here, or little or 4x from the current price. So where does ETH go with respect to the machine learning based model? Again, all of the content from now on is available on cryptoweeklies.com, the link on the bottom of your screen. None of the content is paid or any financial advice. It's all for free. The machine learning based price forecast trend on ETH's price actions since 2017 at a weekly level, using machine learning techniques such as ARIMA, LSTM, and XGBoost, says that in an event, in a bull case for ETH without any Euphoria case or a 2 standard deviation move, the price in the next 6 months could stay between less than $2,000, slightly less than $2,000, and about $3,100. In a Euphoria case, which is a 2 standard deviation rally or a 95 percentile bull case with that confidence level, the price action for ETH in the next 6 months per this estimation could be between $2,100 and $4,700. So that, again, in this 2 standard deviation case, also the price forecasted is slightly higher than the previous all-time high of November 2021. Again, that would mean that for ETH to rally beyond its 2021 all-time high from this point in time, that this late into the post-halving year, again we are in the second quarter, it would take a 3 standard deviation move to get to that $7,000 target for ETH in the next 6 months. If it were to pan out in the next 6 months, that would correspond to 99.7 percentile or 3 standard deviation move from the current prices of about $2,200 to about $6,900. So that's the upper end of the limit forecasted by the model. Again, there is only 0.3 chance, again 0.3%, and you have to divide it by 2 because 99.7 percentile confidence also holds a 99.7 percentile bear case as well. Again, price action with this, the red bull case corresponds also with the blue bear case. So all in all, it's only 0.15% chance per this model that the price goes beyond ETH goes beyond $6,900. So this in the next 6 months per the model, although that would still correspond to about a 4x, roughly speaking, a 4x rally from the current price. With respect to Bitcoin, you can see that this green line, which has held support for ETH till about late February of 2025, that has broken. But for Bitcoin, this green line is still intact. Again, if prices of Bitcoin were to go beyond 80k, roughly speaking 80k, again we are only 2,500 higher than that, then this trend line for Bitcoin could also be broken. Now analyzing Bitcoin and ETH risk level, again available over here, the SMA risk for Bitcoin and ETH tells a stark story that in this 2024 bull run, Bitcoin has outperformed ETH, and that's why the risk for Bitcoin in any parabolic rally was higher than ETH. ETH has always underperformed Bitcoin, especially since about when 2024 began. And if you want to go further back and analyze when did ETH had a higher risk than Bitcoin, the last time it had a slightly higher risk was back in May of 2024, and at that point in time ETH price was somewhere over here, the second top that ETH made on its USD pair at around $4,000. So analyzing ETH from this perspective has consistently again, there was a fake out over here in July as well, but you get the idea. Most of the time ETH had a worse time than Bitcoin in this bull run of 2024 and 2025. If we were to look at the current risk levels for Bitcoin and ETH, they're both, ETH is at around 11% risk or 0.11, Bitcoin risk is 0.18. Both of them are in the lowest risk regimen at this point in time, and this late into the bull run, this looks very similar to what Bitcoin and ETH did back in June of 2021, when their risk levels, again, ETH risk was elevated back then at 0.23, but Bitcoin risk was less than 20%. Whereas right now in 2025, 4 years later, or roughly speaking 4 years later, Bitcoin has a slightly higher risk than ETH. This is calculated with respect to their 20-week simple moving average, how the price is doing, and applying a proportional and a linear relationship based analytics on the 20-week moving average. You could check how it is calculated on the bottom of the screen, available under SMA Risk. Where does ETH regression based fair value go? Right now, per this model, the fair value for ETH is at around 4.2k. That would correspond, if the prices were to go to that 4.2k level, that would correspond to that somewhere between the midpoint of the 1 standard deviation bull case and closer, probably much closer to the 2 standard deviation bull case at around 4.7k at a 95 percentile level. At this point, if the prices were to go to that $4,250 level, that would correspond to rally back to the fair value. That means on this current dump that ETH has had, it has not only the valuation has not only gone below the fair value, but also below this green line, which is 1 standard deviation residual or one standard deviation band down from the price action, from the fair value. You can see that whenever the price is below this green line, like it was back in June 2022 till about early January 2023, with some deviation in August during the merge. At that point again, and also back in the December 2019 till about July 2020, those were the best times, historically speaking, going back. Those were the times again over here in December 2018, when the price was below $100 during the bear market bottom. Applying that lens right now at this late into the bull run, whenever the price is below the green line, it has offered a great entry point for ETH. Again, the 2 standard deviation residual to the downside is also coming up really quickly, and also in this last bear market, the 2 standard deviation residual did hold as a support when the price was close to $900 back in June of 2022. Now, if the prices were to go below $1,600, that would mark a 2 standard deviation or a 95 percentile bottom for ETH. That's a key level to watch. And again, this green line, all of the lines are in an increasing upswing. That is because this is a non-linear model, helps understand the trend behind the price action with respect to the market cycles. Whenever we are close to the post-halving year, the fair value kind of jumps like it usually jumps when crypto are in that blow off top post-halving year rallies. Right now, again, if you see in the next 2 to 3 weeks, if the downturn were to continue, and this regression function, if we were to extrapolate that, the price action could very well meet the 2 standard deviation bottom, and that's the reason we are making the video today, to identify if this current dump for ETH is offering any good decent DCA opportunities. For that, we have a DCA model to identify where the current price action is doing and offering the risk reward. Again, this is price color coded with respect to risk and takes into consideration the same polynomial regression model that we saw with a fair value at around 4.2k. And of course, identifying those bottoms with respect to this regression line, historically speaking, has provided, again, if we take a look at this price action and identify some of the, again, a dual purpose for this model is whenever the risk levels are less than 10% per this model identifies the bottom, where the risk is color coded in this purple line, and the opposite is whenever the risk is higher than 70%, this is color coded in gets color coded in darker shades of orange and red. This time around, the risk since about early March or mid March of 2025, the prices are in this less than 10% risk. If they were to go back to, let's say, the 50 to 60% channel, again, we are not saying that it has to go to the 100% risk or the blow off top. If there is a counter trend rally which takes the risk for ETH between 50% and 60% in this green color region, again, there were two times in 2024 when this occurred, but ETH did not manage to go and extend its rally beyond this 50 to 60% risk. If that were to happen in the future, that would correspond to ETH price between $6,200 and about $7,000. Again, that 3 standard deviation rally or 3 standard deviation bull case prediction per the machine learning based model takes the price to that point. And looking at the current valuation with respect to the regression based valuation is definitely insightful, but what makes it more lucrative is to identify how the price is doing with this dotted green line, which is this green which is the residual applied to the applied to the fair value to identify the bottom regression trend line for ETH. Whenever the price is below the dotted green line, historically speaking, the price or really close enough to the dotted green line, that offers a historically speaking a great entry point for ETH. This is also the current valuation of this dotted green bottom regression line is coming in at around $2,000. So price action below $2,000 per this regression based analysis says ETH has reached that accumulation based valuation. If the prices again were to go instead of 50%, if the hypothesis is this time around there is a slightly lower chance of ETH going to that blow off top. Instead, if the peak is between 40 to 50% at 40 to 50% risk level, the price in that scenario per this model would be between $5,400 and $6,200. That is the forecast for ETH per the regression based model. The SMA model that we discussed in this view, again, in this, if we ignore Bitcoin over here and only consider ETH, again, over here per this model at around 12% risk, roughly speaking, it's the same calculation, but it is this is in this chart we have applied the regression the SMA based risk levels and color coded the price with respect to that risk levels. Again, in this model, similar function identifying both the bottoms and the tops. Let's say the hypothesis is only to DCA when the risk levels for ETH per this model are less than 20%. Again, this model does not do that great of a job in identifying risk level. But if we go further down the risk curve, whenever the risks are less than 10%, at least there is a major rally in store, like it was in January 2022 till about April. And this model did identify the June 2022 bottom, and this model has also triggered the lows in early March and late March as risks close to that 10% target. If per this model, again, if we go back to that 50% target per this model, between 50 to 60% risk, that would correspond per this model, the price of ETH at this point could be forecasted between $4,100 to $4,500. So this takes to the 2 standard deviation confluent with the 2 standard deviation prediction that we made using machine learning model, where the peak is in the next 6 months at around $4,500. So this is very similar to the 2 standard deviation, not the bear case. Let's get rid of the bear case for this point in time. Let's check the 2 standard deviation bull case come at around $4,700, whereas the 3 standard deviation comes at around $6,800, $900. So the time weighted average price model for ETH is also signaling a cool off in the market. The risks have gone down to less than 15%, around 15%. This model did a phenomenal job at identifying the bottom in June 2022 as well as in December of 2022, when the price was lower than the time weighted average price. The time weighted average price for ETH is coming in at around $1,500, and there is a good chance that as we talked, that if the 2 standard deviation residual green line that we talked in our regression analysis, if that gets breached, the price could come close to the time weighted average price at around $1,500. Again, this is confluent with the 2 standard deviation band again over here, coming in at around $1,500-$1,600. Going back to the time weighted average price, this again, as if and when the price approaches the time weighted average price, let's say this the price meets the time weighted average price at around $1,550, extrapolating it in 2 to 3 weeks into the future, and if there is a continued downturn, that could also signal a decent buy zone and trigger 1, 2 and 3 of the models, as well as this regression based estimation into the buy zone. So that's the reason we are making the video today. If we were to look at ETH and extrapolate what the price could be in a ultra bullish case, if let's say all the 3 models were to hit 100% risk in the upcoming bull run, the highest ETH could go per our models is at around $1,400. Again, that's a very unlikely scenario that all of the models go to 100% risk, because they are calculated in different using different analytical measures. So taking a weighted risk of 12%, again applying to the current price, takes you to $14,000, but taking a 60% or 80% of this bull target makes it more compelling or realistic. So let's take 60% so 80% first of the 14k target that we had per the confluence of all the models, takes ETH higher end at around $11,000. If we apply 60% or 0.6 to it, that takes price action to $8,400, and $8,400 ETH is somewhere between the 1.618 and 2.618, whereas the $11,200 ETH is very close to the 2.618, currently at around $11,500 level. And with that, I would like to conclude by saying, first, if the price action were to fall any further, the levels to watch is definitely the 2 standard deviation residual to the downside at around $1,600, and the time weighted average price coming in at around $1,550. The DCA based fair value run and the machine learning based and the SMA based model says that 2 standard deviation forecast for ETH in a bullish rally is first at around 2 standard deviation level. If it were to peak at that comes close to that $4,500 level. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.